What's good, trading floor family? Tuesday morning. Your boy Wildcard back with the man they call TB. Futures are up. Chips are bouncing. Kospi ripped more than 8% overnight. And I'm telling you right now, this rally is wearing a mask.
Quick heads up. We're not financial advisors. Everything we say is opinion, not trading advice. Do your own homework, set your stops, don't bet the rent. Quick reminder, nothing we say here is financial advice. Always do your own research before making any trades.
Now, here's where the tape sits. Nasdaq futures up roughly 0.7%. S&P futures mildly positive. The VIX, a touch lower but still elevated. On the surface, it looks like a risk-on morning. But TB, you've been staring at the bond market. What's under the hood?
The bond market is screaming a completely different story. MarketWatch is running a headline that inflation could top 4% this week. Bloomberg says the Treasury market is telling Kevin Warsh rates need to be higher. Ray Dalio is out there calling debt a plaque in the circulatory system. That's not a soft landing. That's not rate cuts. That's a tightening cycle brewing. And equities are rallying on peace hopes and a chip bounce. Those two narratives cannot coexist. One of them breaks today.
So you're calling a head fake. What's the timestamp on that?
I'm calling the intraday fade. The Nasdaq prints its high in the first hour, maybe the first 30 minutes. Then the bond market reasserts, the inflation positioning kicks in, and the green bleeds away. If you chase this open, you're buying the top of a headline rally that hasn't read the bond market yet. Watch the 10:30 a.m. Eastern print.
Testable. Queen. I love it. Now let me pull the China thread because it's the same exact split, just in geopolitics. The Pentagon just added Alibaba, ticker BA, and BYD, ticker BYD, to the 1260H Chinese military companies list. That forces U.S. investors to divest, blocks contracts. These names are going to gap down. But here's a contradiction. Yesterday, China dropped trade data. Exports to the United States surged 35% to a 5-year high. Chip exports jumped 110% because of the artificial intelligence boom. The world is buying Chinese goods at a record pace, while Washington is slapping sanctions. That's the bond market versus equities split. But in trade, one reality wins.
Right. And it feeds the fade. The blacklist crushes Chinese ADRs directly, but the bond market move hits everything with duration. So you get a two-layer sell-off. China names get hammered on the headline, and the broader tech rally loses steam because the 10-year yield won't cooperate. The real question is whether it spills into semis. Taiwan Semiconductor, ticker TSM, sits right in the crosshairs. If NVIDIA, AMD, TSM all open green and then fade by midday, the rotation out of tech is confirmed.
And oil is the other side of that coin. Crude sitting at $94 a barrel. Rystad Energy saying $150 if the Iran conflict keeps going. Supply chains choked. Shipping costs through the roof. And now the Pentagon escalation with China. Energy benefits from every one of those inputs. The energy sector, ETF, the energy sector is up 1.8% on the week while tech is down nearly 6%. But we'll dig into the book later. First, let's hit the calendar and rotations. Earnings this week, nothing notable. Calendar is empty of anything that moves the needle for our book. Moving on.
Let's run the economic calendar fast. Today, nothing big for the US. UK retail sales, low impact. Wednesday, we get Japan producer prices, expected 5.6% year over year, and China CPI at 1.3%. China PPI at 3.8%. That's a big jump from the prior 2.8. Also, US NFIB small business optimism and another Atlanta Fed GDP and now estimate. ECB President Lagarde speaks Wednesday too, but the real market movers are Friday and Saturday. Friday, US Producer Price Index. Core PPI expected 0.5% month over month, down from 1.0% prior, but the year over year is still elevated. Also, the ECB rate decision expected to hike to 2.40% from 2.15. Then, Saturday, we get the Michigan inflation expectations. 1 year previously 4.8%, 5 year previously 3.9. The bond market is pre-positioning for those prints. If they come in hot, the fade TB called gets rocket fuel.
So, Friday, PPI, and Saturday, Michigan are the main events. The bond market is already pricing that, which is why today's rally feels borrowed. Now, TV, take us through the sector rotation, because the board is loud.
1 week sector leaders, healthcare XLV up 3.25%. Energy, the energy sector ETF up 1.8%. Real estate XLRE up 1.76%. Laggards, consumer discretionary XLY down 2.37%. Communication services XLC down 3.91%. And technology, the tech sector, down 5.92% in a single week. That's a hard rotation out of high duration growth into value, real assets, and defensives. Healthcare leading, energy gaining from the geopolitical and inflation tailwinds. Tech's 6% drop in 1 week tells you the AI crypto narrative bid is unwinding fast.
And that sets up exactly where the money is going. Now let's take it overseas, because Asia, overnight, painted the same picture with a different brush.
Asia was wild. South Korea's Kospi surged 8.18%, likely chip rebound relief. Nikkei up 2.17%. Shanghai Composite up 1.28%. But Hang Seng down 0.37% because the Alibaba and Buy blacklist hit Hong Kong ADRs overnight. Europe is mixed. Germany's DAX up 0.37%. The UK FTSE down 0.35%. Eurostoxx 50 up 0.78%. On the currency side, USD SPY flat, dollar index down a touch. Mild risk appetite, no big carry trade alarm yet. But tomorrow, Japan PP. I could reinforce yen strength if it beats, and that would feed a carry unwind. Meanwhile, if US yields keep climbing, the dollar strengthens and pressures emerging market currencies. The macro plumbing all points to more pain for duration assets.
So even overseas, the tape is telling the same story. Chip bounce got bought overnight, but the blacklist hit China names, and the bond market is lurking under all of it. Now, let's get into our books, where the real pain and the one conviction play live. TB, walk me through your Wave Trader algo and your personal paper.
The Wave Trader algo is fully deployed. 25 out of 25 positions. It's bleeding. Wolf Speed is down 19%. Novavax, NVAX, down 20%. NuScale Power, down 21%. Those are the quantum and nuclear names that got wrecked in the tech unwind. The system screened over 300 signals yesterday, only one passed all gates, and we had no slot available. The funnel is working. We're just caught in a broad rotation. One bright spot, Kohl's KSS, the department store, is up 8%. In a week where everything narrative-driven is getting drilled, a boring retailer is the winner. That's the rotation in a nutshell. Personally, I held Occidental Petroleum, OXY, from a few days back, down a few cents, but I'm not trimming. Energy is the one sector that holds up here. I'm not chasing Chinese ADRs into a forced divestment headline. My call for today remains the fade. NASDAQ high in the first hour, then the green bleeds away.
And my side. My TFT algo is carrying 16 names, total equity, $108,964. Unrealized loss around $3,000. Drill Team 6 is busy. The biggest wounds, Apple, down 763, 6, ENPH, down 694, Amazon, down 666. Those are all artificial intelligence narrative plays getting unwound. The one pocket of green is Canadian Solar, up $19. That's it. Correction. That Avantis Healthcare momentum breakout was a mistake. That entity doesn't exist. My gut call account is where I'm making my real move. I'm long some from yesterday at 423 that caught the chip bounce, but the conviction is energy. My gut call paper has a limit order for Exxon at 147.50 with a stop at 142. If it doesn't fill, I'm taking the energy sector ETF, the energy sector ETF at the market open. Here's why. The energy sector ETF is positive on the week while everything else bleeds. Oil at 94 with a Rystad call for 150 if the war keeps going. Pentagon blacklist adds supply chain chaos. The rotation out of tech into real assets is loud. Energy is the only trade that works whether the bond market breaks the rally or not.
So we're both leaning energy. My Oxy is small, but it's working. Your Exxon limit and the energy sector ETF open are the conviction plays. The fade call on tech is the counterpoint. Today we're not chasing the green, we're waiting for the bond market to speak.
And that's the whole show. The bond market is the real story. The chip bounce is wearing a mask. By 10:30 a.m., we'll know if TB nailed it. Here's what we're watching tomorrow. Number 1. NASDAQ intraday high timing. First 30 to 60 minutes. If the high prints early and then the index rolls over, TB's fade call is confirmed. Number 2. The 10-year Treasury yield. If it keeps climbing while equities are still green, the trap is sprung. Number 3. The energy sector ETF support. If it holds above $90 while tech fades, the rotation into energy is real. Number 4. P. P. I pre-positioning. Any bond market flicker ahead of Friday's print will tell you where the big money is really leaning.
Bonds are the tell. Watch the first hour fade. If the 10-year keeps creeping up while NASDAQ is green, that's your signal the rally is borrowed.
Don't chase the headline pop. Watch the bond market. That's where the truth lives today. Keep your eyes on the tape, not the ticker noise. Wild card out.